Okay, guys, we get a lot of questions about credit. If you're a first-time buyer or even a buyer that hasn't bought a home in a while, there's a lot of questions about, does my credit matter on the loan and what credit score do I need to have? So I figured I would go through that with you today a little bit. So let's start at the first one that I found is what credit score do I need? Okay. And the answer will be that depends on which type of loan that you're going to be getting. The conventional loans will go through Fannie Mae, Freddie Mac. They did away with their standard credit score of having at least a 600 or 580 credit score. However, I will tell you, when your credit scores are lower than 620, then it's going to be more difficult to get a loan. You're going to have what we call compensating factors. So one compensating factor example would be you're putting a large down payment down, or you have a very large amount of money left over. We call that reserves. Or you have a very high income compared to your debt. We call that a debt to income ratio. You've got to have some compensating factors that make up for that credit problem, right? And so, or credit challenge with your credit scores being lower. So you can do loans with credit scores lower than 600, but you're going to have some compensating factors and a very, very good explanation as to what happened that caused the credit scores to be lower. For example, I had a customer that had a heart attack, right? And was out of his job for about 6 months recovering. So obviously that was a big event and hopefully a one-time event. He got back in his job and he was doing fine. So everything was good. But it was about a year and a half later that he wanted to do the mortgage. And you could see on the credit when that happened. And when his scores, he was on time with everything, and then all of a sudden something happened medically that caused him not to be. And so they just had a bunch of bills, and they had not lost his job, but he was off for a long time. So things like that, things that are one time, not reoccurring, can be explained with a great letter of explanation. There's a possibility. It's not a guarantee. It's a possibility depending on all the other factors, all the other compensating factors like we talked about for credit. So to answer your question, what score do I need? There is not a score required anymore, like a hard floor. So you can go down further than the 620. I would say to aim for a 620 credit score or higher. And honestly, a 620 is not great. Obviously, you want to be in the 700s or high 700s, or maybe even 800 is more excellent. So you'd like to be there if you can. Sometimes if you're a new borrower and you just don't have a lot of credit, it can take a while for those credit scores to go higher, because part of the credit scoring model is based on the longevity of how long you've managed credit, okay? And there's nothing you can do if you're new at managing credit to get more time managing credit other than let time happen, right? Another big part of the credit scoring model that you can manage very quickly and change and improve very quickly is the amount of debt that you're holding compared to your credit limit. And I see this happen with credit cards a lot. So let's say that someone has a $10,000 credit card limit, but they owe $9,000. That makes a big impact on your credit scores. So if you brought that down really under 30% of the available credit, so that would mean under $3,000, then that will greatly improve your credit scores. I've seen it improve a person's credit score by 50 points. So that makes a big difference. That is something you can do very quickly to manage that, okay? Another thing I would urge you not to do is too many inquiries. Don't go out getting a lot of different credit, because new credit can hurt you because it's new, you don't have the longevity, and it's an inquiry on your credit report. So those are some things I see happening. Another thing that can hurt new borrowers that I see a lot is they may let an old collection just sit there, right? Let's say that they had an apartment that charged them $100 for a cleaning fee, and they didn't agree with that. They're like, hey, this apartment was clean. I don't agree with that. That's an actually true story. And it was a $100 collection. Well, that collection is a huge, big blemish on the credit report. It would have been better for them to just pay the $100. Just, they can pay it under protest, but just pay it and get it off of your credit report so it's not there. Because as soon as you go to pay that collection, that's recent activity on a collection, guess what it does? It lowers your credit score again. So just go ahead and pay it off, get it resolved. Try to keep your medical and collections and judgment off of the credit report if you can, especially if you're thinking about buying a home anytime soon. That definitely will raise your credit score so you can get better programs and better interest rates. So let's see what other questions we have here. Does getting pre-approved hurt my credit? So of course, getting pre-approved, if you'll look at my video I did about that, we will pull your credit report, okay? And the good news is after 15 to 45 days, it doesn't hurt it. But within 15 to 45 days, if you're pulling it from 2 or 3 different lenders, it should not impact your credit score at all negatively. I really don't suggest doing that. I would suggest interview a couple of lenders before you pull credit during the pre-qualification stage. Talk to some people, check their reviews out, and then pick a lender that you're going to go with that you feel comfortable after you talk to those lenders, and then pull credit with that one lender, because that lender, like us, we have the ability to go out to all the different banks and lenders and directly to Fannie Mae and Freddie Mac and get those interest rates and programs for you. So you don't have to go shopping for that as much. That's my opinion. That was the next question is, should I check with multiple lenders? I'd say during the interview stage, the pre-qualification stage, you're welcome to check that out. See who you relate better to, who explains things better to you, who's more responsive, and then go with that person that you know in your knower that you can trust, right? And then at that point, go ahead and get pre-approved, pull credit, and do that and work with that lender all throughout the process. But as far as it hurting your credit, it will be a hard pull, so it will hit your credit score slightly, but not a lot, okay? And it has to be done in order for us to know if you're pre-approved or not. So hopefully that answers your question on credit. There are other things we could go into on credit. Please just DM me or get in touch with me if you have any questions about that, because it is important. It is one of the many factors that we look at to help you get qualified, but not the only factor, okay? There are other factors we look at, but credit is an important one, and we know that y'all have a lot of questions about that. Please shoot me more questions if you have them. Maybe I'll make a video about it. Thanks.